Gold price is once again soaring. It climbed to a new all-time high last Friday. Silver price is on the rise as well, once again eclipsing $30 an ounce. We have to talk about Jerome Powell's recent comments and how this is affecting precious metals. And lastly, is Taylor Swift to blame for some of this inflation? One major bank thinks so. Let's get into it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Okay, so first off, gold has been on a tear. It is currently sitting at $2,522 an ounce. It moved up $33 last Friday. This is the new all-time high for gold. It is never closed as high as it is right now. And silver is on the move as well. Silver currently sitting just above $30 an ounce. It moved up 89 cents last Friday. That is a huge move for silver. And actually, Harry over at Harry's Coin Shop was right.
The Federal Reserve arguably tries to help the incumbent in an election year. On the tail end of the convention, the Fed speaking on Friday should be saying things that support the candidacy of the Democrat Party. Therefore, I would think a rate cut, or at least a hint at a rate cut in the fall, will be mentioned. If that happens, gold should go higher. I don't know if it's way higher, but it should respond positively. With silver under $30, and I don't think that's going to last. I don't think you'll see 29 something through this week. I think it's going to hit 30.
Now, the reason gold and silver moved higher certainly had to do with what Jerome Powell was saying at Jackson Hole on Friday.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability.
It is now abundantly clear that the Fed has given up on inflation. They are more worried about the economy. Take a look at what happened to the dollar right after Powell made those comments. It absolutely tanked. And look at the 52-week range. The lowest the dollar has been in the last year, 100.6, which is where we are at right now. So this is the bottom for the dollar, but it can go a lot lower. Take a look at the target rate probabilities that CME Group has put out for the next Fed meeting, which happens to be on September 18th. They are predicting 76% chance that the Fed only cuts rates by 25 basis points, a 24% chance that the Fed will cut rates by 50 basis points. Now, if the Fed does the larger rate cut, this will certainly push the dollar lower and precious metals higher. But if we fast forward to November, you can see CME Group is actually predicting once again there will be another rate cut, most likely another 25 basis point rate cut, but there is a pretty substantial chance that the cut could be larger in November as well. So we'll have to wait and see how all of this plays out. But once again, now that the Fed is lowering rates, we need to look at how fast they're going to be lowering rates, because this will have such a huge impact on gold and silver. Now, I don't know if I've shown this off in a video before, but I know a lot of you are curious what the Fed is actually going to do, and they said that they're still data dependent on how fast they're going to be cutting rates. So over at FX Empire, they actually have this cool economic calendar. We have next week pulled up, and it's going to show all of the economic data coming out day by day, country by country. So for Monday, you can see we have the durable goods orders for USA. This is likely going to have a high impact on the economy, and they go through every single day. You can look through this. I know it's getting a little bit thick in the weeds for some of you out there. You're like, okay, I don't really care care, if the U.S. is going to have the personal spending come out and then the personal income on Friday. But the core PCE price index, this is actually probably going to have a huge impact on metals. So this is something you can look at if you care. Also, if there's anything huge going on, like Jerome Powell's speech last Friday, I'll probably cover it in one of my videos. So if you're subscribed to the channel, hopefully you're not going to miss anything crazy. But when he said the time has come for policy to adjust, I got shivers. As they say in this Kitco News article, it marked a turning point in U.S. monetary policy. This is where everything changes. This is where the Fed decides to give up on inflation, because remember, they were raising rates to combat inflation, and instead they're going to focus on saving the economy. So by them giving up on inflation, this is essentially telling every single bank around the world, you shouldn't be holding dollars, you should be holding gold instead, because inflation is going to continue and it's probably going to get a lot worse. Shadow Stats has not updated their chart in quite a while. You can see it was last updated over a year ago, but the red line here, this is the numbers that the government is giving us for inflation. So it was last at around 4% on this chart. It's probably closer to 3% now, but look at the blue line. This is a more accurate representation of where inflation actually is. It last ended around 12%. It's probably closer to 9% now. But either way, we have not gotten back down to the 2% goal, and I don't know if we will ever get there again. So who's to blame for all of this inflation? Well, believe it or not, one bank is actually pointing the finger at Taylor Swift. Just when you thought the headlines couldn't seem more absurd, Swiss banking giant UBS has issued a warning that in the global battle against inflation, the worst enemy of central banks could be none other than pop star Taylor Swift. Hotel prices will often rise for accommodation near a mega event venue. Transportation costs, in particular airfares, may also increase. The measurement method for these prices is more likely to capture the unusual and transitory pattern of demand, and it is here that the increase in consumer price inflation takes place. Wow, you don't say. The prices go up around the area that she's performing? This is madness. They go on to write, it isn't so much that UBS is wrong. Sudden increases in demand drive up prices, but the large point is how the notion itself lays bare the total absurdity of the global economy and the nonsensical notion that a handful of central planners is able to micromanage global inflationary pressures. Are Taylor Swift concerts really enough to move the needle on global inflation and derail monetary policy efforts? I'm just going to tell you right now, the answer is no. Even in countries like Germany, where debt to GDP ratios are lower this year, contracting economies keep signaling trouble. For better or worse, none of this is Taylor Swift's fault, so Swifties are off the hook, but the same can't be said for central banks. All the ECB, the Fed, and other central banks know how to do is print money, locking countries into boom and bust cycles as they tinker with the money supply and set interest rates that the free market would never have settled on naturally. Central banks don't create real or sustainable growth. The bankers would love to be able to blame Taylor Swift or the Olympics for economic crises, but these busts arise from and are made even worse by their own monetary tinkering and government intervention. So what is going to affect gold and silver prices moving forward? Well, obviously the thing that's having the biggest effect on them right now is the Fed's willingness to lower rates. So how fast the Fed lowers rates is going to have a huge impact on gold and silver. I'm not sure if silver is going to be able to hold above $30 next week. We will have to wait and see. If it dips below, that could be a really good buying opportunity. Gold has been moving higher, and it seems like nothing can slow it down. So it's probably going to continue to go up. If it doesn't, though, that could be a great buying opportunity. So look for those dips and take advantage of them when you can. But honestly, moving into the later part of the year, I do see higher prices for both gold and silver. And throughout this decade, I think they're going to go a lot higher as well. Let me know your thoughts down below in the comment section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.